saying. I've got to do the work I'm supposed to do. It's possible you can have it, in spite of where you are right now. That's not important. And it's necessary that you go at it with everything in you. You don't take it lightly. You go at it, and you take responsibility for making it happen. And you own up to the fact it's going to be hard. So what? I'll do it hard. Sometimes you might be defeated, but to you, how do you keep going?
Let's go. Amazing day, amazing day, amazing day. Let's get straight into it. Sorry for the delays, guys. Apologize. I keep not putting the video on loop. Apologies. Let's go. Let's get straight into it. Amazing day. We are looking at GBP USD. We're looking at gold. So we're looking at some different little pairs here. So let's have a look at the moment at where should we start? Let's have a look. Let's have a look at our GBP USD. Let's see how that's doing. And let me try and get some energy in the background. I don't know what happened this morning with the video. Apologies. Let's get some smooth jazz in the background, like we're in. Jesus. In the cafes there. All right. So let's make sure that we understand what's going on here and looking at this pair. With GBP USD, you know we're bearish. I don't know if you guys have been able to take any trades, but you know what we're waiting for is we're waiting for a significant indication, correction, continuation. That's what we're looking for. We're looking for some significance, or else you're going to be trading it up and down, which is fine. We want to see it, we want to see it break outside of a range and do something. Now have a look how this market, here's our line. This is the highest point, so we're touching the lowest point before the highest point. And then we're seeing the market indicate, come up here. Now it's just making an actual lower low. So if I was to draw a line, for example, take this line here, we're kind of in this kind of energy here. Can you see? Making this kind of energy in here, all right? Maybe the angle might change a little bit. All right, touch this down. Okay, so, I'm very interested in getting into this trade for the sell. All right, I'm very interested in getting into it bearishly. I'm going to see where we're going to break this structure here. We have, it looks like, see if we've got a significant break on the 15-minute time frame. We've had a lovely 15-minute close outside of here, and this market is now making a little bit of a retracement. Where could it retrace to? It could retrace all the way back up into these levels. Don't get confused. It could. All right, I'm hoping it doesn't need to, but it could do. All right, so we are watching it, and we are watching it for a lovely indication, which we've got on a 15-minute time frame, which we've got on a 5-minute time frame. We're looking for a correction, and we're looking for a continuation. And when it corrects and continues, I'm telling you, I'm not giving you the option. What we're going to do is we're going to place our stop above this swing high. Yeah, we're going to hold on to this trade and see what happens. All right. So what we're going to do is we're going to, unless it pushes all the way back up into here and starts breaking structure, which is possible, and then we're all up in here. But we want to place our stop above this swing high level, all right? And we want to leave it wide because this market's been mucking a bit, all right? We can see that as much as it's making ever so slight lower lows, it's kind of in a bit of a range. It's a little bit rangy. It's a little bit in here. It is making some progress, pushing down, but it is still a little bit in here. So I want to make sure that, we've got the best chance of survival, placing our stop above this high. I mean, obviously the safer place is all the way above the whole area for 30 pips, okay? But we're watching it, all right? So what I'm going to do is I'm going to place an alert over here. Now, understand, I'm in the 15-minute time frame. Alert here on a 15-minute time frame, though it may ring at any time when the market pushes down below it. I want a 15-minute closure down here. This is a 15-minute indication. I'd like a 15-minute closure in the next 13 minutes below this level. If I drop to a 5-minute time frame, let's have a look. This is a 5-minute closure, and therefore I would be looking for a 5-minute. This is a 5-minute indication. I would be looking for a 5-minute closure below here. However, when I do get that 5-minute closure, of this market pushing down here, doing this, and then doing this, and I get a 5-minute closure here, I have to be very conscious of the fact of all of this imbalance, all of this space up here that the market may decide to come and wick into. That's why I said if you take the trade, you know, it's like you're taking it early on the basis, and in my opinion, you can't necessarily ignore that imbalance. All right, now the market could just go and keep going and keep going and not take comfort for this imbalance, but that would be, you know, you being lucky. All right, we can see here we've got some USD red folder news today at 3 o'clock. All right, we've got some Euro news coming out in the next 27 minutes. So, you know, this would constitute as you being lucky. All right, let's have a look right now. This market's pushing down here on a 5-minute time frame. It's pushing below that level a little piece. We've got 2 minutes and 22 seconds before that candle closes. Okay, and the issue is if we're in this range also, this blue range here to here, taking a trade for a sell down here would be taking a trade into going into discount. Hence the reason why I said if you was to get in here early, in my opinion, you must put your stop above this level over here, this high, because, you know, there's a very, very high likelihood that the market might push back on you before deciding to do something. All right, so where I'm looking at it is you can have a wait for this market to come and tap back into these imbalances. We can see on a 15-minute time frame, we've got some smaller imbalances in here. If we wanted to make it a larger time frame, there's some larger imbalances. All right, wait for price to go and tap back in there. Or if we was to execute the trade now because we was eager, our stop's got to be above. Our stop has got to be above this high over here. All right, which is, you can see this stop here, and that's about 20 pips. So what I'm going to do is we're going to watch it. Look, have a look here. Even though we had that in the alert going off as it broke that level on a 5-minute time frame, it didn't close below that level. All right, it just wicked down here first, pushed down here, didn't close, and then this new 5-minute candle is currently green at the moment. All right, hasn't closed. All right, so that's all fine. We're waiting for a closure below. I prefer that we don't get the closure. I prefer that the market pushed up in here first. I'm going to pop my alert in here. All right, pop some alerts in here. Oh, crossing up. Yeah, so there's an alert right in the middle of this action, crossing up. Oops, I'm trying to grab it. Yeah, move it down a little bit. There's an alert there. But ultimately, I do want to be in here for the sell. I do, okay? I do want to be in here for the sell. Have a look how the market has on a 1-hour time frame indicated breaking some structure, corrected, and potentially coming down here for the continuation. That continuation candle here, this 1-hour candle, does not close for another 24 minutes. All right? Doesn't close. So this energy here on a 1-hour time frame, this indication, this correction, this continuation at the moment, this candle does not close to confirm that continuation for another 24 minutes. Hence the reason why I said, if for argument's sake you execute here, in my opinion, you must place your stop above these levels, because this market could easily decide to kick back in here and come down here and still be respecting market structure. Okay, we are at the bottom of the range also, which is a discount. We know we don't really want to sell from a discount. We want to essentially buy from a discount, or at least see the market break outside of that discounted range, showing that it wants to, you know, continue its motion down. All right, it's very simple. If you take this trade, your stop must be above these levels for 20 pips. Okay, even when it comes back up into here, which would be perfect, you know, to be safe, you want to place your stop above these levels here. All right, for 10 to 15 pips. All right, so we are definitely watching this. I am very interested in getting in for the sell, getting in bearishly, but the market is doing whatever it needs to do at the moment. And what that is at the moment is doing a little hokey cokey near breaking below. This is an indication, but all of this is a hokey cokey. If I go to my 15-minute time frame, we've got 8 minutes before this candle can close to say it's a 15-minute closure. And I prefer that it started pushing up here, to be fair. All right, so I've got my alert in. I'll move this one down a little more. And I'm also putting an alert down here if the market starts to do something else. But that's my analysis for GU. All right, If we look at XAU-USD, which is gold, okay. So, if we're both of us, we look both of those pairs, XAU-USD, GBP-USD, we're looking at potential for it to be set to sell. What does that mean for the dollar? What kind of outlook? What do we want from the dollar? What do we want from the dollar? If we're looking at GU for the sell and potentially gold for the sell, what is it that we want from the dollar? Strength. We want dollar strength, We want dollar strength because they're both against the US dollar. Good morning, my bro. They're both, gold against USD, GBP against USD. All right, so let's look at, this is the Dixie, which is the dollar index. This is the chart for the dollar index. Does the dollar, is the question, look as though it's going to gain strength or lose strength? Let's have a look, okay? Let us have a look, all right? We can see that the market was doing this. We see that the market has started to do this. When I say has started, that was in 2012, okay? Pushing out here, breaking structure, like so. Kind of in the middle of the range at the moment, but in that impulse of it being in the middle of a range, we're kind of here, okay? From a technical perspective, I drop down to my daily time frame. You can see this market's been making some higher lows, and ultimately lower highs. So it's a bit funny, like equal highs. It's a bit funny in here. All right, look at this market. It's a bit funny. All right, we can see this impulse. If I was to just draw this little impulse in here, like this, these lower highs, like so. The market pushed down in here and then started pushing up in here bullishly on the daily time frame. Okay, we can see if I drop to my 4-hour, how the market came down into here, this level in here, went sideways and then started ever so slightly making higher highs, higher lows, higher highs, higher lows, higher highs, ever so slightly. Okay, have a look. If I was to draw some lines in here, possibly looking something like this. Yeah, maybe on the top end, looking something like this. From this perspective on a 4-hour, the market is, bullish, making higher highs and higher lows, and we are in a discounted area of that range. There is still capacity for this market to come down here, still capacity for it to go down here. But at the moment, this impulse does look like a bullish impulse. If I drop down to my hour time frame, let's have a look. We can see how the market came down in here. And then from there, things changed, breaking structure, making higher highs, higher lows, and higher highs. All right. So, from the dollar index perspective, the market looks like it's potentially bullish, that we from this discount here, the market may continue pushing up, potentially breaking some structure. The liquidity is here above these highs. The market may continue breaking structure here, maybe trying to get to the other side of that yellow range, this yellow range here. All right, now that's ultimately, it's not clear, it's not absolutely fantastic. Like, yeah, this is definitely, because I just don't like the fact that we are kind of in the middle of this bigger range. But, it is, in my opinion, looking like potential strength in this market, as the market is in a bullish trend, and we're in that bullish impulse of that trend at the bottom of a range, i.e. in a discount. Yeah, in the discount here, and kind of pushing up in this little level here. So maybe that's what the market's going to continue to do, and if that is the case, we may see US dollar strength that may help the bearish energy of the markets that we've been looking at. All right, so having a look back at GBP USD once again, is that we can see here on a 50-minute time frame, there's 3 minutes and 25 seconds left. And this, even though it's an absolutely pathetic retracement anyway, or correction anyway, so it's not really necessarily what we want to see. We want to see a nice correction. And this little green candle as the correction alone is, yeah, It's not really great. You know, I'd like to see some actual little mountain happen, not just a green candle. So ultimately, you know, I'm hoping that people on the call right now, can be able to see some sort of retracement to these levels. And then potentially this market may decide it wants to continue. It might push all the way up into here, where it's retracement. And you may be able to get into some sort of correction over here. If there's some nice market structure in this level here, if there's some nice structure in here, you know, and you're able to get in this trade early, you know, over here, then by all means, great, go for it. Okay, placing your stop will be smaller, so you'll have larger lot size. Alternatively, you will wait for the market to come down here. You place your stop all the way above that swing high, and I think it's only about 20 pips. And then you're looking at it as a more longer term trade. Maybe you're going to get a 1 to 4 out of that trade. Okay, that is definitely not a problem. But at the moment we're waiting, because look, on a 5-minute time frame, this red candle here indicated below this structure here. This could be a very, you know, pathetic, weak kind of correction, but we haven't got no closure below it, so our money's in our pocket. On a 15-minute time frame, which is more definitive, where we can see these imbalances, we've got a 15-minute closure here also, but we haven't got, you know, this isn't a great retracement. It could be just to close this little one imbalance up, but we haven't got a closure below here, and we've got 1 minute and 36 seconds of the third 50 minutes since that indication. Yeah, so half an hour since. Okay, so that's the outlook on that. So like I said, I've got my alerts put in here also, and that's that. All right, let's go and look at US 30. All right, let's go and look at US 30. All right, I'm going to delete everything off our US 30 chart. I'm not going to have one we made earlier. In fact, I mean, let's not look at US 30. Let's look at JER 30. All right, because we're just getting some news that's coming in, I think, in the next 15 minutes. I believe. I'm trying to find the one with the right broker. Is it that? Is it that? Okay, 1 second. Trying to find out when this one was here. DE30 Euro EUR. Okay, so let's delete everything off this chart and have a look. Look at it from a bigger picture. This is what they call the DAX. All right, the DAX. I'm sure you've heard of the DAX before. It's the German index. All right, and now let's have a look at it. We can draw some lines in. So the lines ignoring COVID is like this. Ignoring COVID, okay? We'll take COVID into consideration because it doesn't have that much of an impact for us. All right. And we can see here some lines like so. I'm going to draw them all in. I'm going to draw them all in. I'm going to draw them all in. DAX looks like it's been doing well. Yeah. Looks like it's been bullish. Looks like it's reached even all-time highs in April. Okay. So we could put in a range here. We could pull this one out for this range over here. All right. We could even pull this one out for this range over here. We can give them all different colors if it helps you. Yellow for you guys. And pink for you guys, and the white range over here. All right, so looking at it like now, like that, let's go down to our daily time frame. You see what's going on. On our daily time frame, we can see this market is definitely, approaching a real pinnacle of premium in this yellow range. Within this pink range, we're at the top of the range, in real premium. The market's been trading within this white range, okay, making some higher highs, trying to draw it properly, and some higher lows. The angle is a little bit off, but I can't bother to fix it. All right, this being the highest point, this being the low before the highest point, and the market's pushed down here. Hasn't broken this structure here, okay, but it's been making some bearish action in here. Might decide it wants to push up some more. Let me fix this angle because it's just It's not great, okay? In fact, I like it the way it was, like this. I'm gonna leave it. I like it the way it was. Could be better, but I like it the way it was. We're touching enough data points. 1, 2, 3, touching these top ends. Boom, 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 boom. All right, cool. So we've seen the market's near a premium. This market could decide it wants to continue pushing up a little piece. All right. Or it could say it wants to come down into these pink levels first before pushing back up. That's not impossible. Okay. So let's drop to our 4-hour time frame and have a look. Yeah. In our 4-hour, we can see how the market is trading within that range. All right. That range is, well, to be honest, this is the high. The market hasn't broken this structure yet over here, previous. This is the new high. The market is trading down bearishly. Let's put a line in here so we can see that bearish action. Like so. Okay, let me change the color of that, make it bright green. Market's trading down within this range like this. Okay, it was previously in a smaller, tighter range like this. You can see it was like this, it was in here, then it broke outside of there, and it's pushing back up into these levels. Now let's have a look at why it might be pushing back up into those levels. What's there for it? Well, we can see some imbalances, okay? If I was to just use the tool, you'll see them all highlight, but they won't stay when I change time frame. That's the reason why I don't use it all the time. See, look, see these imbalances? There's one here on the 4-hour time frame. Now, could the market be wanting it to push all the way back up into these levels? Of course it could. Could want to push back into here. I'll do that and make that an imbalance. It could want to push up into here. These are 4-hour imbalances. I'm going to mark them as 4-hour imbalances before I forget. All right. Let's just do here 4-hour. And this, we're going to do the same 4-hour. Okay. Into them levels here. All right. Now we can be able to draw some lines in here. The trajectory at the moment this market is running in, like so. You know, if we was to try and put a top end in, maybe it's like this, but maybe not. All right, because obviously we see now there's some news. Let's have a look at the news. 10 minutes time again, some Euro Bank Austria manufacturing. I don't know how dramatic that is to DAX, to be fair. But that's in 10 minutes. So therefore we can keep an eye on it, see what happens. It will also be 9 o'clock. I'm thinking the market's going to push into these levels. And then at that point in time, we'd be interested in looking at it for the sell. All right, for the sell. Okay, so whether it's going to be from here, whether it's going to be from here, this is what's going to be interesting. I'll pop an alert into this 4-hour area, crossing up. We can go and look at it in a smaller time frame, see what we see. Then we can see a lovely candlestick zone just after. Is it just after this 4-hour area? Let me change this, take off this. You can see a candlestick zone in this 4-hour area here. This is a bearish candlestick pattern. Okay. The bearish candlestick pattern. Have a look. Can you recall what I said about this GU? Yeah. What did I say about this GU? If anybody was listening, in regards to where I wanted it to go, what it's doing, the 15-minute closure.
What, retrace back up, and then you're waiting for the indication to break structure below.
Yeah, that's it, and that's what it's done. It's come down here, pushed down. You see the novices have hit the button down here. Look, gold, GU is going down. Jay said we're gonna go. We should be bearish on it, but we know better. We've seen the indication on a 15-minute. We've seen indication on a 5-minute. On a 15-minute, this little green candle could have been a correction, but we really want to see a little mountain for a correction. We really want to see that correction being seen on a line chart, like a nice little mountain, and then coming back down. So therefore, I'd have preferred it to be coming back and start closing this imbalance, and even this imbalance here would be perfect, of this market pushing up into here and then starting to do something here. And if I can, I'll try and get an entry here with my stop above here. If I can't, I'll take an entry down here, but my stop will be above here, meaning that when the market retraces back up in here, I'm still safe. Yeah, or if the market retraces back up in here, I'd still be safe. okay, if my stop is all the way above here. But at the moment, this is what we was waiting to see. We don't want to hit the button down. If we did hit the button down there, we will have to be placing our stop quay above this height. If someone was, for example, on the way out there doing it, we need to take that trade. Well, they could do, but the stop has to be above this structure all the way up here. So this is good, I'm seeing this. I'm going to put my alert in again here, see if it continues pushing up. So that's my eyes. I'm also going to pop an alert or move my alert, which is down here, move it up a bit if it starts to come back down. All right, that's what I'm going to do. And what was he looking at? He's looking at our DAX. Our DAX in the next 8 minutes, there's some Euro news, and maybe that's going to give it another little push, allow it to just push a little bit into this area. When it pushes into this area, I'm going to be looking at on a smaller time frame to see if I'm getting a nice break of structure. Let's look at this in a smaller time frame. Go to the 15 minute. So in the 15-minute time frame, we can see that this market, we can see that this market was trading within a lovely range like this. It was calm, it was like it was doing this. But there's one range like this. Let me draw it as a different color. And we can see this happening. Okay. And then we can see it accelerating into its bullish energy. Like so. Okay. We can try and put them on for the levels on for everything. And kind of like so. Kind of drag this down in. And we could even put this on more so like this. We can see how the market's really accelerating. This is getting parabolic. This line is getting parabolic, as in like this. Look, it's accelerating into something, right? It's not doing this, yeah, or it's not doing this. It's doing this. It's accelerating. Price is increasing. The value is increasing quicker than it was doing, the hour or the minute before. All right. So it's this is this shape. And I'm expecting maybe to see it go into here, or if it goes nuts, even into here. But this here is my second choice. I believe maybe we're going to get into here and then see some break. All right. So it's going to grab some liquidity potentially above this high. Okay. Because remember, above every mountain high is liquidity. All right. So by pushing above it, which is kind of doing now anyway, it's grabbing the liquidity of everyone who is selling from this level with their stop losses above here. All right. Let's have a look at GU. GU's come back up in here, fully closed this imbalance now, and coming down here. I'm still watching it. I'm still not overly impressed by the retracement. Okay. I'm still going to look at it on a 15-minute time frame. We've got 6 minutes before that GU closes down here. On a 5-minute time frame, well, we just got a 5-minute close here. How do I know? Because it's 8:55:06 and this candle's still up here. So even though I'm looking on a 15-minute time frame, I can look on the time and I know that we didn't get no close down on the 5-minute time frame because it's 8:55 and 15 seconds. Look, I go to my 5-minute time frame. Look, the candle just closed up here. And now it's just fraffing about over here. So we haven't got a 15-minute close. We haven't got a 5-minute close. The next checkpoint's going to be at 9 o'clock. And at 9 o'clock, we may see this market's push all the way up in here. Or we may see it close down here. And if it does, maybe there's an ability to take that trade. But at the same time, you'd be taking that trade going into a discount. And your stop, in my opinion, must be above these highs. Because when it taps into that discount, because there's a very high probability, it might decide it wants to start accelerating down here and going to hell, of course. Or it might decide, yep, tapped into the discount, pushing back up into these levels until 12 o'clock, 1 o'clock, and then deciding to turn around. And if that does, and your stop is above here, you're still in that trade and you can still win. If you take it too tight, you get stopped out, you lose your monies. All right? You lose your money. All right? So let's have a look at this DAX. We've got 3 minutes. Let's see if there's a reaction in the 3 minutes. We are at the top of this green range-ish. All right? Ish, because it's not necessarily. At the top of this green range-ish. But this market may want to keep pushing into this 4-hour imbalance, which is also in a 4-hour candlestick zone. A candlestick zone is seen as a wall, and imbalance is seen as a magnet to price. Okay? So look at this. Let me show it to you guys if you don't understand what a candlestick zone is and what the wall is. to this candlestick zone here. Can you see? This candle here, followed by this big red candle, is a bearish candlestick, engulfing candlestick pattern, which illustrates a change in direction bearishly. Indicate that this market was coming up here. It indicates a zone, an order block. Okay, I don't necessarily love the fact it's here. Obviously, we love to see order blocks at the top of mountains. Here's another one in here. This bearish engulfing candlestick pattern on the 1 hour time frame is another order block, and the market could decide to push all the way up into those levels. I just wouldn't say it's my first choice. But we're watching it. We've got 3 minutes. Is this going to continue pushing in here? Is that news going to do nothing? I'm not too sure whether banking in Austria, manufacturing PMI, is going to have a dramatic effect on the DAX. May do. All right, may do, but we will find out in the next 2 minutes. I am looking just for transparency for the sell out of this to be able to understand where this market's going to tap into to start selling. I don't want to start buying this at the moment because I think we're coming into a premium. All right. And I think the overall energy of this market is bearish. I don't like the fact that we're kind of, we're coming into a overall higher premium also. So like I said to you, that's why I said the market could push up into this 4 hour, or it could spike up into this 4 hour, getting it to the top of the overall premium range, that green range there. See it? I'd prefer to be selling from up in the top of this thicker green line, opposed to it turning around now and pushing down here. Because if it turns around now and pushes down here, it might be pushing down here only to push back up into these levels and then decide it wants to go. Okay, so therefore I'd be wary of that. If I got into the trade and I was profitable, I'd be wary that it might want to just turn around at any minute. Okay, GU again, look, have a look. We're calm, money's in our pocket. We're not taking no trades at the moment, chilling, hasn't done what it needs us to do, so we're calm. Remember, the patience bit of this trading thing is very, very difficult also, to be able to just sit on your hands, all right? Let's look at USD JPY to see what's going on in UJ, all right? In UJ, as soon as it loads, is the United States dollar still being beaten up Japanese yen, still been pushing bullish, and we're all the way up near the top, the tippy top of this range, which is that orange box. I'm just trying to draw it better over there, okay? Let's zoom in and see what this market may or may not do. Now, we were saying that the market could break structure bearishly there, and it didn't continue here, all right? It got to the bottom of the range here, and then it's pushing back up against the border of that range. Look, it's pushing right back up here in a kind of discounted, smaller, tighter trend in here. All right. So if I was to draw some angles like so, this market is, it's in here, pushing up in that little tight range, and we're coming all the way up over here up to this high in here. And the question is this market going to grab the liquidity from above that high and then change directions? Or is it going to keep pushing up and bust out the top of this range? We're in a real premium now for this range. We've been hearing about intervention from Alan in regards to the Japanese intervening in their currency, maybe increasing the interest rates, giving it some strength against the US dollar. But if the US dollar is also strong, this is where Forex comes into play. The US dollar is also strong, then it might be balancing that energy out. Might be balancing that sentiment out, and it's still doing its thing. So that USD being strength might push it past this level, might push it past these highs, might push it up into these levels, might even push it outside of the range before the Japanese yen or the US lose strength. All right. So looking at this trade here, this market here at the moment, based upon the market structure, have a look. Clean indication, correction, continuations on a much bigger picture of this market wanting to push up, and it has been pushing up, making more indications, more corrections, more continuations, coming to a level where there's potential liquidity above here. If it breaks through there, I'm expecting to see another correction and potential continuation until something else happens. Am I fast right now? Do I really want to get involved in the EJ buy right now? Or no, I don't. If you're near the top of this premium range, even though there is still a nice distance left, yeah, there is still a nice little run here left, 40 pips, all right? I'm not really in a rush to jump into that EJ for 40 pips. Or UJ, sorry, for 40 pips. I said EJ. UJ, all right? Let's look at another one. In fact, tell a lie, 902. Let's go have a look and see if anything happened in our DAX. News came out, worse than expected for Bank of Austria manufacturing PMI. Okay, high impact news. And I'm looking at our DAX, and nothing's changed. More than likely that news was priced in. Hasn't got no erratic additional volatility. The market is still here. Big old green candle on the hour time frame. Big green candles on the 15-minute up into these ranges. Big 5 minutes. Lots of green candles up in here. Okay. And for me right now, it's just about, waiting to see what this does on a decent time frame in regards to breaking structure. So I'm gonna pop an alert up here. I still would prefer to see it. Well, I'm not gonna do anything until it pushes up into these levels. All right, but I will put a little alert below that 5-minute low. If the market starts doing something else, just had a GU ring in, pushing back down here again. Let's look at it on a time frame. So on a 15-minute time frame, we've got 11 minutes before this candle closes. Okay. On a 5-minute time frame, we've got 1 minute and 24 seconds before that candle closes. But candles have been kind of fraffing about. So this indication, this correction has been fraffed out a bit because the market came and wicked below here, below the indication. And then the market came all the way back up in here. So for me personally, this here noise in a 5-minute time frame has deleted any type of ability to just say I'm going to hit the button on another 5-minute closure below that low. See this down here? No. I need to see another indication correction continuation on a 5-minute time frame, or a 15-minute close, which is happening in 10 minutes and 47 seconds below here. But when that 15-minute close happens, I need to understand that I'm going to be right here in this discounted area, which I'm not interested in taking a sell from a discount. If I am, I must place my stop all the way over there. So I'm still sticking with the same energy. I'd prefer to see this market makes a nice retracement. If it doesn't, and it's in 10 minutes time, this candle closes here, and I have the feeling that for whatever reason, we're going to go. We've broken this structure. We've indicated we're correct to continue. I'm feeling we might accelerate down in here. We're not going to come back into these levels. That's fine, but I must place my stop in a place that's going to keep me safe. I must place my stop in a place that I'm going to have some safety. So we're looking at 20 to 25 pips away. Yeah, if I really wanted to be meticulous, I'd say above this wick for 30 pips. All right, that's what I would say, and that is on the basis that I believe that this market, and you have to be able to know that there's enough trade in the trade and there's enough profits in the trade for you to get in. Where would I be targeting? Will I be targeting these equal lows? To these equal lows is a 1 to 1.6. It's not breathtaking, but it gets you in the trade. There's nothing to stop you from getting in the trade again after you see it accelerating and scaling in. But for you to hit a button less than placing your stop above these highs, in my opinion, is potential suicide, because you're taking the trade into a discounted area, even though it's not very clean, and the market could easily decide it wants to come back up in here before coming back down. If it does that and you've got too small a stop, you will be stopped out. Okay? And you don't want to be stopped out. You want to stay in the trade. Even if you get the trade doesn't go, immediately in your direction. You want to have enough of a buffer that you don't get stopped out and lose your money. Look at this 15-minute candle. It's all the way up here again. Yeah, this is why our strategy keeps us safe. It's about patience. Yeah, it's about patience. Yeah, on a 15-minute time frame, this market is doing nonsense. This is a 15-minute close, but we've got all of this 15-minute imbalance. I'll get rid of this one, it's been closed. But we do have imbalance here for 15 minutes. And if we put our time frame up, We've got our imbalance, which goes all the way up into here. We've got our imbalance in here. All right. So I'm not going to be, in a hurry when I'm seeing all this. In fact, let me highlight that one also. All right. It's here. And that is our imbalance. I have to understand that these markets move the way they move. They don't move because I happen to be in front of my computer right now. All right. They move because they move how they move, and how I happen to see them is irrelevant. All right. I need to take into consideration all the things that I know. Can't be impatient. Impatience will lose me money. The patience element is that I know that this market on a 15-minute time frame had a lovely closure outside of this little range. That's an indication. This might have been a continuation closing at the first 15 minutes, but on an hour, there's still imbalance in here, and there's additional imbalance above. And if we're saying that this is the range that the market's trading within, this blue range, this dotted range here, this dotted range here, we're kind of trading into the discount. The market is bearish, but we're trading into a cheap price for it being, even though the market's falling. All right. So therefore, if I do get in here, I have to understand that. And I have to take the precautions of saying, okay, I'm going to get in here, but my stop has to be above the previous swing high. Meaning that this might not be a trade that goes for 1 to 10 zillion. All right. But it still could be a profitable trade if you understand how to manage your risk. All right. Let's have a look at that JER 30. Still dancing, still making higher highs, higher lows, higher highs, higher lows, hasn't broken any structure. And I seriously believe that maybe this market is reaching for in this level. But at the same time, I would trade what I see and just place my stop accordingly. Okay, let's have a look at the XAU USD, which is gold. All right, we can see this energy for gold. Let me zoom out of it, of my markup. All right, I'm zooming out of the markup. Now you can see a few little lines in here, and some of them are drawn badly. Try and draw some of them a bit better. Where's the end of this one? All right, let's try and draw this a little bit better. Here, making the angle like this, touching the data points. The data point, let me change the color of that one. I'm touching the data points. Where are the data points? Because somebody doesn't know. Here and here, touching this last low before this swing high. On a smaller path, on a smaller trend, I can draw a line like this, yeah, touching this last low before this highest point. All right, I draw this pink line here. Let's make it pink. If I wanted to put in the range, it'll be like this, that market was trading within. Okay, obviously we can see smaller impulses, this impulse down here, this impulse pushing up here. We can see smaller impulses, but that's what it is. And then gold's come up to this level up in here and then started to make lower lows and lower highs. Have a look. If you can't see it, I'm trying to make sure that you can see these candles. So for a lot of people, it's just being able to see the letters. Once you can see the letters, you can read the text. If you can't even see the letters, it's very difficult. And I understand that is a journey of you looking at these charts over and over and over again. This is why I'm here. My thought process is this market moving from a premium down into a discount into these levels. In gold, if you're able to catch that trade and place your stop in the right place, it's going to be a profitable trade for yourself because gold moves. All right, covers a lot of ground, gold. All right. So when you get in there for the right lot size, not for the wrong lot size, because you still must manage your risk. Gold does, travel. Okay, it does have a lot of, volume and move quite substantially in a day period. Okay, so it'd be nice to be able to see this market moving down within this yellow range. We know it's going to retrace at some point, but moving down and getting down to at least this blue line. Okay, how well is that blue line drawn? Not that well. Okay, but it's a guide. Because remember, it's not a line. There's somebody going, oh, you're drawing these lines, bro, but how comes sometimes you draw them touching this and sometimes you draw them touching that, bro? You're taking it too deep. It's not that deep. It's a guide. Yeah, it's a guide. It's not a this is the millimeter. Here, look, I've made it a little bit better. It's a guide. You can clearly see, I don't care anybody tells me, even if you've got slight cataract in one eye, you can see that this market is trading down within this blue range. It's making lower lows and lower highs and lower lows and lower highs. And though it might not be to the millimeter, like look here, it goes over the line a little bit. Here it's under the line a little bit. Here it's in the middle of the stop. You can see here, I put out a parallel line. You can see it came down here and touched here. You can see it came down here and touched here. It's a guide. So my saying, the market is going to continue doing what it has always done until it does something else. So what it has been doing is this. It's been doing this. I'm saying it's going to keep doing this forever and ever 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 until it decides to do something else. That's my opinion. So until this market decides to do something else, it's going to do what it has always done. So it's just the only job I have is to try and get into this trade in a way whereby I can place my stop that in its madness, in its volatility going backwards and forwards, that I'm in a place whereby I don't get stopped out by its schizophrenic nature. That's the only thing I'm trying to do. If I place my stop over here, it's a safe place. It's quite a safe place because we're all the way past this imbalance. We're all the way above this swing high, and we're expecting the market to come down. So that means even if this market goes backwards for the next 2 weeks, I might not get stopped out. And then the market might say, okay, yeah, Jay, we're ready. But that presents me less rewards. That green box, less rewards. See that number that's moving, risk to reward ratio? That massive trade that could take a whole week and a half is going to give me a 1 to 1.5. It's not massively compelling. So as a day trader, I'm trying to find a better risk to reward, a better entry. I can start using different highs, maybe this high as a structure. I am still concerned above this imbalance above it, but maybe I use this high. That would automatically make my risk to reward better because I'm doing that. But if the market decides to kick back in here and close this imbalance, well, I get stopped out. But we've just moved our risk to reward from a 1 to 1.5 to a 1 to about a 3.5. What does that sound like? That sounds like you giving me $100 or $1,000 and me giving you back $3,500. Sounds all right? Sounds a little bit less attractive if I say you give me £1, I'll give you back £3.50. You kind of be like, yeah. But it's exactly the same as you giving me £1,000 and me giving you £3,500 back plus your 1,000. Yeah, plus the 1,000 that you had hasn't gone anywhere. That is what a 1 to 3.5 trade is. And let me tell you something for free. You will take a 1 to 1.5 or 1 to 2.5 trade every single time. Just doubling your money. You must have seen the memes and the images about what doubling your money does. It's the game of 10 doubles. Who's ever heard of this before? Who's ever heard of the game of 10 doubles? Tell me yay, tell me no. No? Maybe not. Have a look. Have a look. Let's try and find a decent picture. I thought maybe I'd find a decent picture straight away. Oh, here you go. Let me try and open this image by itself. It's the game of 10 doubles. That's not the right one. Can you see? Is that Niaos? Niao. I don't know how you pronounce it, but there you go. Have a look at that. Yeah? Doubled it once, doubled it twice, third time, fourth time, fifth time, sixth time, 7, 8, 9, 10. All right? Million quid. I mean, they've got it at stage 1 here, but it's the 10 times you doubled your money. Just imagine you had something where you could double your money. All right. So therefore, double your money in trading terms is a 1 to 1. Now, of course, you're not risking everything. This is not exactly the same. You're not risking 100% of your capital. But I'm just saying, you know, if you was trading and, you know, you had a very strong strategy where you made 1-to-1, you know, you could still do, you know, still do some damage. Yeah, it's not gonna turn your grand into £1 million because you're not risking 100% of your capital. Okay. However, it's not to be sniffed at if you can do it consistently. Have a look at this DAX. We're having a little bit of a retracement, but we still haven't broken this structure here. And I still think it has a possibility to do this. Right? We'll be watching it, and I'm going to pop my alert. I'm going to move this alert from here. I'm going to move it down a bit if I can grab it. If I can grab it. I can't grab it. Let me just put a new one in here. Right click, add an alert, crossing up. All right. So we've looked at a few of them. Any questions about anything? Is there any questions anybody has about the strategy, about what's been going on in their trading, etc.? For full transparency, I am in this gold trader ready for the sell. All right, I've gotten it from early, and I'm hoping that this gold continues to push down in here. It's already showed me that it kind of wants to go in this direction, and I'd ideally want to see it breaking this equal low and coming down into these levels. That's ideally what I want to go for. My entry was probably something like this. Okay, I can't remember. I'll have to look. But I'm planning on scaling in because I'm not in as big as I could be. All right. Now that is a high risk thing I just said, or higher risk. What I mean, it's not high risk, but it gives me another opportunity where I can lose money. At the moment, I can't lose money. I'm risk free in that trade. If I get in again, I expose myself to being able to lose some money again. All right. So I either do that on the basis that I'm trying to, get more rewards, or I just stay humble and be like, you know what, is what is. I'm cool. I'm just going to let that trade ride out. Now, for me, I'm going to try and take everything off the bone. So if I can see a great opportunity for me to get back in, what is that opportunity? Well, that opportunity is looking at the structure here. This is 4-hour structure. Indicate, correcting. We're continuing over here. We haven't got a 4-hour closure below this level as yet. Go to my 1-hour time frame. Have a look. This market pushed down in here, indicated, corrected. Here we did get a closure here. All right. We did get a closure here on a 1-hour time frame. And on that basis, that could be your trade hitting here with your stop above that area. Now, I would be concerned about this imbalance, but it is what it is. If that market starts kicking back up here, it's taking your stop because it's going for this imbalance. So you just got to hope that it's not going to go there. Or you're going to place your trade, your stop all the way over here, which is quite large. It's too large, in my opinion. All right. It's not too large, but it's quite large for a day trader. All right. But yeah, it's a different conversation. But on a smaller time frame, have a look. The market's been pushing up here, and then it broke structure. If I drop my time frame down to a 15-minute now, all right, the market pushed up into these levels here, boom, making this high. All right, if I was to draw some lines, looking something like this, it's not massive angle, but pushed up in here and then started to break that structure, indicating, correcting, not a clean continuation. Here would be it. All right, and then your stop would be on a 15-minute time frame, could be above that last correction, which is here. It's indicated over here, making a closure here, breaking this structure, corrected up into these levels, then didn't give you a clean closure all the way until here. All right, and therefore that could have been an entry. All right, and then since there, the market pushed down some more, made another correction, and then they're coming back down here, and we're seeing whether are we going to close below this level here. So on a 15-minute time frame, once again, let me see the 15-minute. You haven't quite got an indication below this level. I'm not going to lie to you. On a 15-minute time frame, you haven't. This is a wick. All right, it's a wickedy wick. All right. On a 5-minute time frame, let's have a look. You haven't quite got a 5-minute closure either. So at the moment, this market is doing a little dance. DAX is moving, pushing bearish, but we're going to have a look to see if a candle closes down there. It's doing a little dance in this kind of box. We draw a box. Draw a bit of box, like so. We're kind of in here doing a dance. All right. I'd like to see a nice indication out of here on a 5-minute correction continuation, or a lovely 15-minute closure based upon the market. Based upon this indication, based upon this correction, a lovely 50-minute closure. My stop would have to be above here once again. All right, it's quite a big zone, but it is what it is. Okay, on the basis that that market may be trying to get down to this yellow line over here. Hope I'm making sense. Okay, but like I said, it's about patience. It's about that market's going to do what it needs to do when it decides to do it. Let's have a look at that DAX. Well, that DAX or gain, look at it on a 5-minute time frame. We've got 2 minutes and 22 seconds before this 5-minute close. Okay, a 15-minute time frame. Time now, please. Thank you very much. You know, we can see, you know, some imbalance in here on a 15-minute time frame, and the structure that we can see from a 15-minute perspective is here. All right, and then here. So realistically, this market could decide to push down in here, closing that imbalance only to get up into this level here, and then decide. And then from here, I'd be interested in seeing it do this. See, I'm still a bit dubious about why this market wants to turn around now and start going to hell. Doesn't make that much sense to me. Yeah, what makes more sense to me is, yeah, we've captured a little bit of liquidity from above here, but then we push up, close up this imbalance, tap into this candlestick zone, and then start rocking and rolling, which might happen at 2:30. It might happen as a catalyst to, as a reaction to one of these catalysts. I don't know. Euro, no, this has already happened. USD news, you know, is the USD going to affect the DAX in that way? The reason why I'm saying that is because obviously the United States dollar is not directly related to the German index, but the United States sneezes and the rest of the world catches a cold. Everything's connected. All right. So I'm watching this here. I'm not getting excited by it turning around here and breaking some very sketchy. This hasn't closed yet. We've got 28 seconds for the close, but breaking some sketchy 5-minute structure. I'm not getting excited about it. I can't get excited about it anyway. Even if it does close here, obviously that's just an indication. Afterwards, I'd be waiting to see a correction and then a continuation. So we could get a very big red candle, come all the way down here and close the imbalance, and then the market does this. Corrects, and it doesn't continue, and then starts going back on its merry way, which is kind of what in my gut I feel that this market may do. All right, but we shall see. All right, we shall see. Gold has taken a big old retracement, which is fine. And we're watching it. Any other pair someone wants to look at? Does someone want to look at a pair in particular, and we'll have a quick glimpse at it before we finish up? Does anyone want to look at a particular pair?
Not really, no.
Let's go and have a look at our Bitcoin. See what the Bitcoin's doing. Okay, and we did speak about this, because if we can find the one that I'd marked up, probably see my markup, but I never remember what broker I use. Is it this one? I want to see what broker I use. I'm guessing it was one of those two top ones. We'll start again. It's no problem. All right, so I think we was talking of, if we zoom out, go to our 15-minute, go to our hour. We were saying how Bitcoin is trading within this green range, okay? And at the time, whenever we was looking at it, which could have easily been when the market was up into these levels, okay? We're saying, look, Bitcoin is trading within this green box, which is a sideways action. We're getting down into a discount of this consolidation, this sideways actions. However, we are not there yet. And the market has been trading down. Let me get rid of some of the stuff that's already happened. Imbalances have been closed. I'm not sure what this was there for. Okay. The market is trading within this range. And the question is this Bitcoin taking this there as the bottom of this range? And now it's ping-ponged. What do I mean by that? I mean it's it's pinged, it's ponged. Is this its ping for it to continue going like this and do a pong? I don't know. I wish I knew. Yeah. However, what I can do is I can watch it. So on a 4-hour time frame, you can see 4-hour structure up here as the market made lower lows, lower highs, lower lows, lower highs, lower lows. Now the market is trading within this 4-hour range and that 4-hour low. That's what the market's doing on a 4-hour type. If we drop our time frame down to 1 hour, we can see how the market has broken some 1-hour structure. Because as the market was coming down here, look, it made lower low, lower high, lower low, lower high, lower low. The market has just broken that 1-hour structure over here. Made it a nice closure over here, indication, even a little correction, a little continuation. But, when I say but, it's getting up into this premium of the range. So if I have to draw this line better, because I can see already it's off, and the reason why it is off, because normally when I'm drawing this, I'm drawing it from a large time frame. So the larger time frame I am, the less accurate it is. But let's say for argument's sake, I'm going to redraw this, touching some data points like this. Okay, touching some data points like that. The other one was a bit off. It was sitting here. Let me make this a different color so we can see which one I'm talking about. All right, like so. We are in a premium now when maybe this market wants to keep pushing down. We can actually even see on a smaller time frame, if I have to draw some lines like this, that the market is looking like it on a 1-hour time frame. We've had a 1-hour break of this structure here. Okay, indication potentially, yeah, and then we have correction at the top of that little range, pushing back here. Could it push back further? Yeah, there's some smaller imbalances. Have we got an hour closure below here? Not yet. We've got 30 minutes before that hour candle closes. If we go to our 15-minute time frame, we can see how we've had 15-minute indication with some of these candles. We've had a bit of a correction here, but we also have 18 seconds before this 15-minute candle closes. Now, for argument's sake, look, let's say it closes here in 15 minutes, and I take this trade on a 15-minute indication, correction, continuations. Let me explain to you the risks. I hit the button here in the next 4 seconds. All right, like so. Place my stop above here. Okay, cool. 15-minute time frame. This is tight anyway. I don't like to see it looking like this. I like to see a nice bearish candle, to be fair. But the issue is on an hour, this candle could push all the way back up into here, close in some hour imbalances, for example, like this. All right, and therefore stop us out. Yeah, unless we're going to take that trade and take into consideration some of the hour concerns. Okay, which we could do, pushing this all the way up here for 400 points, 400 pips. All right. So this is how we look at this in a 15-minute time frame. Just about got a closure. We did. All right, we did just about get a closure, but that closure tapped into a candlestick zone over here. Just about. I'm not even gonna give it. And again, the problem with this, guys, is I'm looking at Bitstamps candles. I guarantee you. Watch me show you something. This is Bitstamp as the broker. Let me duplicate this out. We'll go to another page. In fact, I could even do it in a better way. Split this page into 2 using this little tool here. And over here, I'm going to go to another broker. So I'm going to go to Bitcoin, BTC, USD. And with this one, I'm going to look at when it decides to load. I know I've got a few of them going on, so let me close some of the other ones. Maybe they're hurting me. Maybe they're hurting me. All right, I'm gonna go to, I don't know, Binance's Bitcoin. And I'm gonna go to the same time frame. So this time frame here is 15 minutes. Let's go to this time frame here, 50 minutes on Binance. And we can see some discrepancies. See? Here, this 15-minute candle is closed below this level in here. Here, this 15-minute candle has not closed below it. Can we see this? Can you see why the point when I turn around and say to you, we want clear closures? Because the brokers are giving us slightly different prices. This is what happens in Forex. This is why when somebody's so like, I'm waiting for this candle to go 1 millimeter. Like, why? Because you've got such a big X in the form of your broker. Look, I'm showing you again. This 15-minute candle closed below all of this action here. Here's the closure. This 15-minute candle, which is the equivalent, supposed to be the last 15-minute candle, didn't close below this. So you now hit the button thinking, yeah, that's a closure. It's not actually a closure. You see it? Hence the reason why I said I want to see a nice, clean closure that can't be denied. This is not undeniable. All right, think about that. Think about when you're looking at these candles from TradingView or your broker, they are not the be all and end all. They are just a middleman. They're like Santander, that they're getting their interest rates from the Bank of England and they're giving you a slightly different rate. Or maybe they're slower. You know, I watched a great documentary on bot trading and the requirements for speed to be able to get your information early, you know, about people placing their machines and they're trying to be as close as possible to the exchange for speed. Because let me tell you something, if you're a bot and you can get the information in half a second or maybe milliseconds, the guy says this is how fast their bots are. They're 10 milliseconds away from the speed of light in regards to their transaction speed. And what bots do, for those of you who don't know, front-running bots, is that this. I'll do a very, very, very simple explanation. Maybe there's somebody here with more knowledge about it than me, but my understanding is this. Say, for example, there is a news event or there's some events happening and a big order comes in from here. This order has to go to the exchange, which is here, okay? To go and buy, I don't know, gazillion amounts of dollars worth of whatever, okay? Now, if that exchange can't satisfy it, it goes to the next exchange and it goes to the next exchange. What the bots do is they intercept this order here, okay? They intercept this order. They know how much order is getting ordered there. And what they do is beforehand, they buy at a better price, okay? So that this order can't get its order filled at 100 quid. It can only get its order filled at 101 quid. But when they've done that and they've bought up all the, taken all the liquidity at 100 quid, and then they buy 101 quid and they're able to sell at that next price, this bot in milliseconds might make 10, 20, 30 grand. Yeah? That's how they work. So therefore, the speed to be able to intercept and make the transactions and execute transactions very quickly is essential. It's how a lot of these big institutions and that, when you hear bots, you hear about trading bots and this, that, and the third. This is it. This is what the games come down to. It's come down to speed. Yeah? Because if they're getting their information with speed, just before me, they can manipulate that information. Your broker can manipulate what they show you because they're getting the information before you're getting it. Now, in the futures market, this is less of a concern. Yeah, everybody kind of gets the same prices, but Forex is different. And you're going to hear people turn around and say, I trade futures for this reason. That there's not this discrepancy between BTC USD in Binance and BTC USD in Bitstamp. There's not this discrepancy here that this 15-minute candle didn't close down below here. Yeah. Okay. Any other questions? So we're looking at this Bitcoin, and what am I saying? I said, yeah, we're waiting for a closure. Boom, boom, boom. It wasn't a clean closure. 15-minute candle is pushing down at the moment. On an hour time frame, we have 23 minutes left before that hour candle closes. If the hour candle does close there, well, that will be an indication breaking this structure on an hour, a correction and a continuation, and you may be deciding to take that trade. I would take that trade, taking into consideration the imbalance also. Yeah, that's a higher risk entry. A lower risk entry, replacing your stop all the way above the swing high on the basis that you believe that you can get at least a 1 to 2, 1 to 3 trade out of it. If you don't think you can get a 1 to 2, 1 to 3 trade out of it because of where you place your stop, don't take the trade. Because it's not worth it. It's like me coming to your house and say, "Yeah, break you, borrow me 10,000 quid, and I'll bring you back, half, like, or I'll bring you back 500 on top." You're like, or 5,000 on top. You're like, at least want a 1-to-1, bro. At least want to double up, like, because it's too much risk. I don't want to lose that 10 grand. I want it to be worth my risk. The time that the opportunity cost of me not having that money around me is worth more than you bringing me back 5,000. So I at least want a 1-to-1, 1-to-2, 1-to-3, like double me up. Give me some returns. All right. So it's the same principle in your trading. As well as that is you want to be in a nice risk to reward ratio that you can afford to lose more times than you win and still be profitable. Let me say that one more time. You can lose more times than you win and still be profitable. If you're losing at a 1-to-1 ratio, well, you can't do that, can you? Because when you lose one, you lose one. But if you lost 5 in a row, so you lost 5. Imagine you lost £5. You're doing £1 each time. But you was actually doing a 1-to-3 was your aims that you was aiming at. Well, when you actually win one on your 6th go, and you win 3 back, well, you're only 2 down now. And then when you win on your 7th go, well, now you're actually up. You're up 1 because you won 3. So even though you've lost 5 trades in a row, the 6th and 7th trade made you profitable because you had a 1-to-3 risk to reward ratio. Whereas if you had a 1-to-1, that would not be the case. All right, that would not be the case. Have a look here. Let's have a look. 15-minute time frame. We've got 5 minutes before this candle closes on the GU. What we're talking about. Our stop would have to be above this imbalance on a 5-minute time frame. This is not clean enough. It is again indicated, corrected, it continued. But if you placed your stop above here, you'd have to understand that it was higher risk that you could get stopped out. If you place your stop above this wick is high here, based upon a 5-minute indication, 5-minute correction, which isn't great, and a 5-minute continuation, you'd have to place your stop. If you place your stop here, you'd have to understand the risk of the imbalance that's above you. You'd be going into a little bit of profits now. Or you'd have to just say, you know what, cool, I'm getting in from now, but I'm being safe. I'm placing my stop up here for 20, 25 pips. Okay. We've got how many long? Oh, we just got a closure there. Like I said to you, this is taking a trade from a discount, which is taking a sell from a discount, which isn't necessarily what we want to do. But if you place your trade above these levels for 20 pips, you'll be saying, I'm going to do it. I'm going to take a trade. I'm going to place myself all the way up there. Why I'm going to do it is when it starts to move into profits, then I'm going to have a little float. I'm going to have a little play money that I can scale in, if that makes sense. I'm going to have a little float that I'll make risk-free, hopefully. And we'll see. But it isn't a 10 out of 10 trade at all, because you are taking the trade from down into a discounted area. It's not fully, the discount there is down here, but it's not in a great area. I'm taking a sell from up here. Okay, but if I do take this trade here early, because I think that this is a closure on a 5-minute time frame, the safest place for my stop's going to be above this structure over here, which, to be fair, is kind of over here. It's kind of like 30 pips away. All right, I'm not going to lie to you. I'm not going to, you can go above the last high. This last little area in here is still about 25 pips, but I'm going to do it on a smaller level, just as a case study to watch it. And remember, I also have the ability to stop myself out early. Okay, I have the ability to stop myself. Let me explain that to you, and I'm going to finish up. All right, so I'm going to hit this button quickly, and I'm going to stop myself out and show you about stopping yourself out early. All right. So I'm going to do that, and then I place my stop 30 pips away, or something like that, like so. Now, have a look. If I was saying that the only reason I got into here is because I saw a 5-minute indication, 5-minute correction. Let me draw the path for you. Indication, 5-minute correction, 5-minute close of a continuation. And then we see this green candle right now. And I take this trade here. This is my trade with my stop all the way above this level over here, 30 pips away. But then I see it just completely go and violate this 5-minute high. I can stop myself out early. I can say, you know what? I don't want to sit in negative equity all the way up into here. I could take the L. I can do. Now, what have I done by doing that? Because someone said, if you're going to do that, why not just place your stop here? Well, if I place my stop here, then that loss would be for my whole risk. I'm risking 1%. That means I just lost 1% on a risky trade from not even from a premium, from kind of in the middle of a range. Whereas here, if I stop myself out early, let's imagine I was risking 100 quid, that might be just me stopping myself out at minus 15 quid on the basis that I just didn't like the energy. Now, if I see it respect this high and start pushing down here and doing some more stuff, cool. Now I've got more of a green flag to get a bit more aggressive. Start placing my stops below these last heights. But at the moment, we don't really know. We're kind of in that little limbo phase. I hope I've made sense. Because if I take this trade here at full risk, which is higher risk, and just place my stop here, if I lose, I lose. When I lose, I'm losing that same 1%, or I'm losing that same amount of risk, which is my max risk. Whereas if I say, you know what, I'm going to get in here safe, and I just don't like the price action, I just start seeing this price getting really doing some stuff like this, cool. I can stop myself out here for a fraction of the loss. And remember, the more money I prevent myself from losing, the longer I survive. Yeah? And if this starts to go to hell like that, just drop into space, I'm like, oh, why didn't you go in heavier? You know, why it would have been better if we, yeah, coulda, woulda, shoulda, maybe. If we got in there like this, we could have had a massive lot size. If we got in like this on some 15 seconds high, we could have had an even bigger lot size, but that's just fiction. And it's not a sustainable strategy. All right? Any questions, guys? Great, guys, the sun is absolutely blazing today. We've run on a little bit. I want you to have an absolutely fantastic day. Go out, push your toes in the grass. You get what I'm saying? Yeah, feel the energy. Get some Vit D. In the meantime, I'm going to play a video about dirty money, cartels, and underground banks. Okay. And if it's something that you're interested in, you continue watching in the live room. If not, I'm going to wish you absolutely fantastic day. For those of you who are watching the video on YouTube, share it, like it.